Hello Wolfpack, I was planning on making a different video today, however the Bitcoin drop has occurred as I've been expecting, and so that video that I was going to make today is going to be put on pause and made tomorrow. I am getting a little bit tired of covering Bitcoin this often, however there has been major developments in the price action, so there is a little bit of covering we need to do, and then we also need to get into the nitty gritty with our usual analysis and get into the changes that have been made to those patterns and how some really important indicators are very much approaching their due dates per se. Now, for those of you who don't know, I've been kind of bearish in the market since 66k, bear market since 58k, and as of the last few months, ever since January, I've been a big believer that Bitcoin will reach 30k before early June, and so we're just seeing that progress right now. Now, we did have a descending wedge formation, and this is what's interesting about the chart right now. As expected, we've broken both of these structures to the downside, right? So I said with the descending wedge formation, I was neutral, but the bear flag breakdown was undeniably bearish. We have broken that to the downside. So if we take a measured move from where I would like to consider the flagpole beginning, which is from December 27th, all the way down to the bottom of the wedge, and apply that to the breakout zone, right, via applying it in a conservative pattern, which is from the last retest of the top, which is when the downtrend actually started, we can see that this is targeting 30k, right? On top of this, if we take a descending wedge measured move from the first retest of the top line to the first retest of the bottom line and apply that to the breakout zone, we can also see that that is targeting 30k as well, right? So both the bear flag and the descending wedge, as per a conventional measured move, are targeting 30k. I've said we're going to go to 30k in early June or by early June. That is seeming to be playing out perfectly as per the two structures we broke into the downside. So it is very clear to me that not only does the longer term TA, which we'll get into later, suggest that we're going to 30k in early June or by early June, the shorter term TA undeniably says that as well. This is the objective reality of TA. That's not my opinion. That is how you get a measured move for a bear flag. That is how you get a measured move for a descending wedge formation. Both of those looking at 30k. If it doesn't play out, we did what we could. We looked at the data. We looked at it objectively. That's what it tells us. So that's what I'm going for. Now, it is worth considering, however, right, that we do have bullish divergence in the RSI. And some people would look at that and say that, well, how can Bitcoin go down if it's got a bullish divergence in the RSI? I would say, and I would point to situations in which this has happened in the past in which it continued going down even though it had a bullish divergence. For example, in May 2021, right, we had a bullish divergence in the RSI all the way from May 2021 all the way to June, right? We had like 3 weeks of bullish divergence, and we completely negated it. We actually dropped below the bullish divergence support line and rejected off of it, and then the price just continued plummeting from there. From when we lost it here at 38k. We still went down to a retest of 28k, another 10k drop, which is a massive amount of percent, right? That's a drop of like, let's see, 25%, even though we had bullish divergence, and it completely neglected the bullish divergence, right? So just because we have a bullish divergence doesn't necessarily mean we have to go up, right? We have seen many, pieces of price action in the past that have seen bullish divergence, bearish divergence, and we still drop or go the opposite way of the divergence is expecting. So I don't think having a bullish divergence is reason enough to believe that Bitcoin's going to bottom out here and just swing up to 50k, right? For sure, I don't think that's the case. Another reason why I wouldn't think that's the case is the sheer amount of resistance to the upside. So now, not only do we have, for example, resistance coming from the descending wedge formation, we also have resistance coming from the bottom of the bear flag. We also have resistance coming from the bull market support band, the Gaussian channel, the Ichimoku cloud, the 50, the 75, which are all in the same or at least a similar region between 42k and 40k. Right, so we have a thick layer of resistance to the upside, and we have two structural breakdowns that are targeting 30k. And so yes, I would use this video to further consolidate my prediction that I think Bitcoin is going to be going down to 30k, and I think it's going to be getting there by early June. All right, that's not a new piece of data. Now, moving on. We have the short-term chart, and we can see that by the time this video comes out, this might not even be valid anymore, but this is the 30-minute chart, and what we can immediately see start to form on the 30-minute chart is a massive red flagpole. When you see a massive red flagpole like this, you generally see consolidation in form of a bearish pennant formation, right? So I would expect a bearish pennant formation to play out. Now, obviously, this isn't confirmed yet. It's way too early to confirm such a formation. However, if we did see a bearish pennant, which is, again, from my experience, typical after a breakdown of this magnitude, we could be taking a bear flag from that bearish pennant formation, applying it to the breakout zone, and seeing a target of something like 32 to 33k. I'd say 33k, and 33k obviously lines up to the low we had here in January 24th. And so it wouldn't be irrational to assume that that would be happening within the next few days. Now, I don't want to say that's a prediction because it's based on speculation. We don't actually have a bearish pennant formation yet. If we do form a bearish pennant formation, we can start talking about that. But at this point, it's all speculation. However, I'm just saying that it doesn't seem to me that the downtrend just stopping here and then just consolidating more would be rational. I think that we are going to be gradually, accelerating with this drop. Maybe not accelerating, but keeping the momentum. What I mean is I don't think we're going to be seeing another one of these thick consolidation periods like that. I think that the momentum will keep up. We might see some chopping around, but I think that ultimately the trend is very much downwards now. We have broken that bear flag. We have broken the descending wedge structure. Unless we form a new structure out of nowhere, which we'll talk about in a future video if we do, it seems as though we've gained momentum on this drop. Supporting that is obviously the longer term charts here. And for example, on the longer term chart, we have something like the monthly chart with the 21 EMA. Now we're getting into the content that I've looked at in the past, and I'm going to be doing a fresh take on things like interest rates and how that's affected the market, because obviously it's not priced in at this point because the S&P 500 has actually dropped. So if you want to see that, go ahead and skip forward. But looking at this for people who haven't seen it before, right, this is the monthly chart with the 21 EMA, the blue line, the 21 EMA there. This is one of the most critical support resistance MAs for Bitcoin, dynamic support resistance zones for Bitcoin in Bitcoin's price history. Every time Bitcoin has interacted with this line via a drop or a pump below it, we have seen dramatic price action, right? In 2014, we saw a 50% drop after losing this line. 2018, we saw the same thing. COVID drop, we saw the same thing. Right now, we are in the process of losing that line. Of course, we have 25 days until the monthly candle close. However, it can happen before that point. Obviously, if we just see consolidation below it, that would be a breakdown. And so there is reason to believe that this month will be very bearish if in fact we have lost that line, which I assume we have due to the breakdowns on the shorter term charts. And I don't really see how we could wick back up and save this close unless something miraculous happens. So I think this is the breakdown. And I think that we will be seeing dramatically bearish price action because of this. Now, what I would say and what I would point out about this chart is we have seen a bearish MACD cross, which is obviously quite bad. Some people would say, oh, the RSI doesn't look too bad. That's an interesting thing to say. What I would say is that if you're talking about the RSI and the monthly chart, you can't talk about the RSI and the monthly chart without acknowledging the massive bearish divergence. And I think that it's fair to say that Bitcoin won't be going down on a macro scale anytime soon, like in terms of 5-year intervals. So I think the monthly chart RSI is misled and misguided. And I'd encourage people to believe, I'd encourage people to remember that we do also have massive bearish divergence in the same way that we have massive bullish divergence on the monthly RSI. But the thing about the RSI that interests me on the monthly chart, and this is quite interesting if you guys want to go to your charts and point this out, is the last two macro bottoms we have had, we've bottomed out on 44 on the RSI. So we're currently at 50. Okay, so we're getting pretty close there, and obviously dropping to 24k, which is where I'm expecting we'll go, 24 to 26k. It's all well and good, but if we reach 44 in the RSI, and there's signs of bottoming out, we'd kind of have reason to believe that maybe the bottom would be in preemptively. So we have to keep an eye on this RSI here. We're getting close to that bottoming out point as per the monthly chart. And so that's something we need to keep an eye on as well. That's very important. Stochastic RSI, some people would say that this is a reason for us to bottom out. I would encourage you to look at what happened with stochastic RSI in 2018. We bottomed out at 7k. We went all the way down to 3k. It meant nothing. Same in 2014. We bottomed out stochastic RSI at 400. We went all the way down to 150. It meant nothing. So again, I think the monthly chart's very important in the fact that if we get a confirmed loss of this line, it's going to get bad, and I think we're doing that currently. And the RSI at 44 and the RSI on the monthly chart is very important for macro bottoms as well. 4-year cycle theory, everyone is familiar with this. Let me just skim over it briefly. It basically says, and some people would say the 4-year cycle theory doesn't exist. I would say the November top is actually more evidence for the 4-year cycle. The 4-year cycle suggests, you can pause the video and look at this chart if you want to, it suggests we bottom out at the 200-week SMA, wherever that may be, by November to December, before that point, right? So not necessarily within November to December, but by November to December is what the 4-year cycle is telling us. Now, if we had to guess, we would say November to December, but it doesn't really matter where it is. It matters what price it is, and that's going to be at the 200 in our opinion. Moving on. We've got interesting charts here on the Bitcoin Liquid Index, and this is probably one of my favorite charts at this point because it's one of those charts that it's coming to the tipping point. But before we get into it, let's look into the BitGet Exchange. In a time when government regulation constantly threatens crypto investors, being able to access an exchange without KYC being mandatory is absolutely exceptional. This is great for me personally as an Australian because a lot of other exchanges out there like Binance don't allow me to access options due to Australian regulation. BitGet additionally is also host to trading fees even lower than the vast majority of the major exchanges at just 0.2% per trade. Sign up to BitGet using my referral link in the pinned comment below or the description box and you will receive up to 153 USD deposited into your account as a reward. So this is the 3-day chart on Bitcoin, and we're talking about depth crosses on Bitcoin. And this is one of the major charts I've used to predict a massive May correction on Bitcoin, as well as the bear flag breakdown and the bear flag in general. And yeah, I really do like this chart. I really think there's a lot of evidence to suggest that this will lead a massive drop. It's already happening, actually. What we can see is that every time the 50-week SMA, the 50 SMA, crosses under the 200 SMA, every time the red line crosses under the green line, which happened in 2014, happened in 2018, we saw a 50% correction or a 40% correction within about a month and a half. Very interesting, right? Now, this same depth cross that led to such corrections in 2018 and 2014 will be taking place in just a matter of about a week, right? In just about a week, it will be taking place. And we have already seen that drop start to take place, just like in 2018, how we started dropping a little bit preemptively before the depth cross started to take place. Now, what we can notice as well is that in 2018, we had a bit of a consolidation price action where we bounced in between these lines. And when we finally lost that line, we led to a massive correction. Now, we've had this same bounce consolidation period between these lines, and we've finally lost this line right now. And as you can see in the last kind of week or so, we have started to see a bit of a sharp correction on a macro scale. And so that is evidence to suggest that, hey, maybe this month is not going to be very good. Maybe this depth cross might actually drag Bitcoin down. I guess we'll find out in about a week when that happens. I guess we're already finding out right now by losing that major support. It seems as though it's pointing to, yes, it will drag Bitcoin down. Going to the weekly chart, we can see that the Gaussian channel is kind of an interesting topic of analysis right now. The Gaussian channel, in about 3 days, most likely, will be flipping red for the 3rd time in Bitcoin's entire history. The only other 2 times the Gaussian channel has flipped red in Bitcoin's entire history is moments before a 40% correction, right, in 2014 and 2018. Okay, that's another piece of evidence for a major correction on Bitcoin in about a week. That might be flipping red. In 3 days, I should say, that might be flipping red. We're also seeing a trend with the 75 SMA, the 200 SMA, and the 50 SMA. Notice that every time the 50 SMA crosses underneath the 75 SMA, we are in the midst of a macro correction for Bitcoin, or a macro drop for Bitcoin. That is happening again within about 2 or 3 days. Yeah, maybe a week. And so that might be another trigger for a macro correction on Bitcoin. So there's 3 pretty strong pieces of evidence, on top of the fact the daily chart looks terrible, on top of the fact the monthly chart looks bad as well, that suggests that Bitcoin will be sharply correcting this month more than it already has, right? What we can notice as well, by the way, some people think that when we get to numbers like 30k and 37, 38k, that they start to forget the percentages are more important than kind of the price action. We've already dropped 7% this month, right? We're already down 7%. That's a major correction. Anything over 20% is a crash, in my opinion. And so we're already well on the way in this May correction. It's already very much happening. If we drop further down to 30k, that's an extra 16%. That's a lot. That's an ambitious target. So I think, just understand the claims I'm making. I wouldn't be making them for no reason. I understand they're ambitious claims. I understand 30k by early June is actually a very ambitious claim. It doesn't sound very ambitious because, when you think of it in price terms, 36k to 30k, it's like, well, there's nothing, right? But that's 20%. That's a 20% drop. That's 20% of the entire Bitcoin market cap dropping in a month. It's a massive claim I'm making here. So I'm putting a lot on the line with that claim. But I would encourage you to remember that it's just a sub prediction. My main prediction relies on the bear market macro bottom. This is just a sub prediction, but it's interesting regardless. And so what I would say as well is that the cryptocurrency market cap, the total cryptocurrency market cap, is falling down. It's broken down from its major uptrending structure, and the next logical place for it to go is the support zone it formed in May to July 2021 and also in January 2021, which is between around 1.2 trillion and 1.1 trillion. And if it was to do that, right, we could see a drop in the entire cryptocurrency market cap of 25% to 30%, which would be basically a 20% drop for Bitcoin and a 40% drop for altcoins. Okay, so massive drops in stall for the entire cryptocurrency market cap here. Moving on to the S&P 500, and this is where it really starts to get interesting because generally speaking, a lot of people were kind of expecting interest rates to be priced in. I said in yesterday's live stream, by the way, it was a great live stream. Hope a lot of you guys got in there. I said in yesterday's live stream that I'm not entirely sure whether it is priced in or not. It seems as though we might have seen a bit of an irrational pump yesterday, right? We saw a 50 basis point rise, hike as expected. We saw a massive pump because of that. And now we're seeing a massive dump with a bearish engulfing candle. So it kind of begs the question, it's like, is it actually priced in or is it not? We don't really know. What we can say is that the dollar is macro bullish, which is bad for Bitcoin. The DXY, right, is a chart that kind of measures the strength of the US dollar in relation to other currencies and assets. When this thing goes up, Bitcoin goes down. This thing is going up. Fundamentally, it is very bullish. We are entering a recession. We are entering a time of economic hardship. When you see times of economic hardships, you see stock markets sell off. When you see risk on assets like the stock market and cryptocurrency sell off, you see the dollar go up. Why? Because how do you sell off an asset? You sell it into dollars. If more people are holding dollars, dollars go up, Bitcoin goes down, right? So if we continue to see this drop on the S&P 500, we will continue to see the drop on Bitcoin for sure. And fundamentally speaking, there is no reason to assume anything other than a dollar pumping, which means there's no reason to assume anything other than the S&P 500 going down, which means there's no reason to assume anything other than Bitcoin going down, fundamentally speaking. Now, interest rates are interesting because obviously the higher the interest rates go, the more the S&P 500 goes down on paper because more people are going to be selling their risk on assets for cash, for security, okay? And we can assume that interest rates are going to keep going up, not only by what the Federal Reserve has said, but also by bond yields. Bond yields have returned to levels we haven't seen since June 2019. In June 2019, interest rates were all the way up here at 2.5%. Interest rates are only at 1% right now, which means interest rates, as per the 2019 data, are undervalued by 1.5% or 150 basis points, which means that there's going to be dramatic rate hikes as the years continue, which means that the stock market correction will ultimately continue happening on a longer term basis, which means that Bitcoin will most likely, if it stays with the current trend of being pegged to traditional markets, will keep going down. Now, I know I've covered all of this a lot in the past, right? And I'm sorry for repeating myself, but I have to. I have to repeat myself because people need to know. Let's move on to the comment section thread regardless. So, every video I do a quick little comment section thread. I go over some comments from the previous videos, and we've got a few interesting comments here today. So we have a comment from Paul. In short, so he's referring to my videos. In short, could go up, could go down. TA is less reliable now and was patchy at best. I find it too easy to get caught up by deciding when to play the short-term movements and day trading versus switching to long-term swing trades when doing even made more sense. Leverage is no way to go either. Hold 50% in Bitcoin and the rest in top-tier coins made the most reliable return. Selling some at an all-time high allowed accumulation. DCA beats every trader if Bitcoin turns out to be a store of value it promises to be. Less stress this way also. So he's making an argument on paper that TA is very unreliable and people should just DCA because it's going to turn out better than trading that way. I would agree with you on most occurrences. However, if you learn how to trade properly and you learn TA effectively, then you're completely incorrect, right? If you don't know how to trade, you don't know TA, you spent 1 hour studying TA, you know what a triangle is and that's about it, of course you're going to lose money trading because it's gambling, right? You don't have awareness of the broader market at all. You have no idea what's going on and you're just looking at the chart and making an assumption. When you understand TA, you understand that it's not just astrology, right? It's mathematics. It's all data. It's all historical trends and data. You're applying that to current price trends and you're trying to predict future results based off of it, right? There's nothing astrological, what is that word? Astrological about TA, right? It is based on mathematics purely. There is, however, to be debated, honestly, more guessing involved in DCAing than there is in trading, because when you're DCAing, in a way, you're actually taking more risk. When you're trading, you're getting in and you're getting out, and you have a maximum risk percentage per trade. You can't lose more than a certain percent predetermined by you before the trade. When you're DCAing, you're basically betting over a long period of time that this asset will not go anywhere and it will keep going up. You're putting massive portions of your net worth on that fact. When you're trading, you don't need to do that. You don't need to have that long-term risk. It doesn't matter what the asset does in 10 years. It doesn't matter what happens fundamentally, globally, whatever in the world. All that matters is the trade, right? And you can focus on that trade and you can hammer down your TA, you can learn it properly, and you can get in and get out and not worry about what's going on in Ukraine and Russia, right? I would argue that DCAing is actually more risky than trading, right? Obviously, if you don't know what you're doing when you're trading, that's debatable. But if you know what you're doing, you're a good analyst, you've done the time, you've done the hard work learning TA, DCAing, in my opinion, is way more risky than trading. William Delbert Garn is perhaps the most mysterious of traders of all time, known for using geometry, astrology, ancient mathematics to predict events in financial markets and historical events. Garn's trading strategies are still widely used today, long after his death in 1955. As I was saying in yesterday's live stream, Mercury retrograde has relevance to markets' downside price action. So this guy's basically saying that the main point that I want to point out, I don't really care about this trade of it he's bringing up, but the main point he's trying to say is that there's a Mercury retrograde. That's an astrological event, so it's based in astrology, that will determine the price action in the market. I would strongly suggest, regardless of what your views are on astrology, that you do not mix mathematics with third-party external events. Okay? Mathematics is all that matters in this market. Everything happens for a reason. Okay, TA predicts all price movements, even during the COVID drop. Let's go over COVID drop right now on the Bitcoin chart. Let's see what happened there. Even during something as irrational as the COVID drop, where no one could have really predicted it, no one really did. There was kind of no indication of what was going to happen. Even during that, we still bottomed out basically right on top of a 200-week SMA, which is our macro bottom point for Bitcoin. Bitcoin has tested the 200-week SMA for 15 months in total, right? And on most major exchanges, Bitstamp is actually an exception, right? It did not close below 200-week SMA on most major exchanges. On most major exchanges, Bitcoin has never closed below 200-week SMA. Even in the midst of all that panic, it never closed below it. That is TA taking effect. That is historical trends holding true throughout time, right? You can bring up astrology all you want, but I would really caution you against that, because astrology is unpredictable, okay? So I don't personally believe in astrology. I have nothing against someone who does. However, I do have something against people mixing trading and astrology, because what you're doing is you're essentially putting your personal beliefs above the data when you do that, okay? And you need to understand that your personal beliefs can be wrong. The data has an objective reality. Your personal beliefs do not have an objective reality. Whatever you think about anything in your life, politics, money, astrology, Mercury retrogrades, it can be wrong. It is subjective. The data can be interpreted in different ways. However, there is an objective reality in the data. It's just about having the knowledge to find it. That's what I caution you against. So before I end the video, I want to get into the Crypto Academy. Now, the Crypto Academy is a course, speaking about TA, that me and Megawell Crypto have created to teach people how to trade, essentially. We have a pre-order sale going on. It releases on May 16th. However, you can pre-order now for a lower price. It covers 10 units, over 400 slides, over 80 videos, 8 worksheets, and a trading diary. This will teach you everything you need to know to go from an absolute beginner in cryptocurrency, not even knowing what Bitcoin is, to becoming an actual competent swing trader, day trader, or even a long-term investor, if that's what you want to do. But we teach you everything essentially about TA. If you're interested in this, email us here at cryptoacademycourses@gmail.com, right? I've highlighted there on the screen. You can also check out the website, which will be in the pinned comment below or the description. Thanks for watching, guys. Hope you enjoyed, and I'll catch you tomorrow with a fresh video.